வணக்கம். I am N. Manimaran, Additional Assistant Director, Nation Chennai. So far, in our Nation YouTube channel, we have uploaded many videos on the topics of customs and GST. Today, we are going to discuss about GST 2.0 with Stevenson, Assistant Director, Nation Chennai, and Srikanth, Assistant Director, Nation Chennai. We can understand the success of GST from the fact that we had 66.5 lakh of assessees in 2017, which has grown up to 1.51 crores now. The revenue has increased from a humble beginning of 96,000 crores of monthly average. Now it has become 2 lakh crore of monthly average. It shows the success of our GST. Sir, now I like to know what is the aim of this GST reforms, sir?
Yes, thank you very much. As you may be aware, the GST was launched on 1st of July 2017, and in the past 8 years, it has been a very successful tax reform in this country. It has since been 8 years since we have been successfully administering this tax reform, and time has come to rationalize and make further reforms to ensure that this tax administration leads to further facilities for common man. GST 2.0 was on the basis of the recommendations made by the 56th GST Council held on 3rd September 2025 under the chairmanship of the Honorable Finance Minister. The reforms aim in simplifying tax structure, reduce compliance burden, correct inverted duty structure, promote affordability of essentials by common public, boost domestic manufacturing and support MSME, startup and ensure ease of doing business.
Sir, before going into the technicalities of this GST reforms, what are the procedural changes, whether it is implemented, whether there is any concession for the new small taxpayers. First, let us look into the tax rate reforms, sir. What are the tax rate changes that has been affected through this 56th Council meeting?
GST 2.0, the main objective, as I said, was to simplify the tax structure. Before GST 2.0, there were 5 rate tax structures as far as GST is concerned, predominantly 0%, 5%, 12%, 18% and 28%. Now, this tax structure has been simplified and reduced to 2 rate tax structure. Now, predominantly we have only 2 tax structures, that is 5% and 18%. Most of the goods which were either under 12% or 18% has been brought down to 5%, and the commodities and services that were under 28% has been brought to 18%. So, from a 5 rate tax structure, we have a merit rate of 5% and a standard rate of 18%.
Sir, you have mentioned only 5% rate and 18% rate. Whether there are only 2 structures or some more structures are also there?
Generally, sir, most of the supplies which attracts tax liability will be covered under 5% and 18%. But there are certain commodities which attracts other than 5% and 18%, like there is a higher rate of 40% on certain goods which are termed as sin goods like tobacco products, pan masala, and also certain other goods which includes aerated water and certain services like entertainment, betting and gambling. There are few other commodities as an exception which attracts a rate of tax other than 5% and 18%, like bricks attract 12%, precious stones and precious metals attract 3%. Other than that, most of the supplies will fall under this slab of either 5% or 18%.
Sir, what is the impact of GST reforms on the food and beverage items?
Food and beverages items sees significant reduction in tax rate. For example, namkeens, packaged namkeens, bhujia, sauces, pasta, chocolates, coffee, preserved meats, plant-based milk drinks, and ice cream. The tax rate has come down from 12% or 18% to 5%. Carbonated beverages attract 28% earlier, and now it attracts 40%. Earlier, it attracted cess also. Now, that instead of cess, they have increased the rate from 28% to 40%.
So the net result will be reduction only. Sir, now can you tell me what is the impact on health sector?
Health sector is one of those areas which has seen a very big reduction in the rate of tax. In fact, the drugs, medicines which were earlier attracting 12% has been reduced to 5%. Medical equipments and devices which were again earlier attracting anywhere between 12% to 18% has now been brought down to 5%. And in fact, to name a few, the spectacles and goggles which were earlier attracting 12 or 18% will now attract only 5%. There has been a exemption for reinsurance and life insurance. So insurance sector was also seen exemptions as far as healthcare sector is concerned. So the life insurance, the family health insurance, and individual health insurance has also, the rate of tax has been reduced from 18% to exemption, which will enhance the affordability and access to common man.
Sir, what is the impact of GST reforms on textiles and the handicraft sector?
Textiles and handicrafts gets a boost in this GST 2.0. Man-made textile fibers now attract 5% instead of the earlier 18%. Yarn also attract 5% from the earlier 12%. Handicrafts, idols, statues, paintings, dolls, toys now attracts 5% from the earlier 12%. Supporting artisans, rural economies and export under vocal for local. So this is the aim for reducing the tax rate on textile and handicrafts.
Sir, can you tell me now what is the change in the automobile sector?
Yes, sir. In fact, Chennai is treated as the Detroit of India, and a lot of automobile industries are there in Chennai. And automobile sector has also seen a very major rehaul as far as the rate structures are concerned. We know that the parts and accessories of automobiles have in fact been, the rate has been reduced from 28% to 18% long back. To sync with that, the cars and other automobile goods, the rate has been now reduced from 28% to 18%. Earlier, these goods carried compensation cess also. That compensation cess element will not be there after GST 2.0. Most of the automobiles, like small cars, will attract a GST rate of 18%. However, large cars, sports utility vehicles and other transportation vehicles will attract 40% GST but without compensation cess. So that implies the fact that the rates in fact has been reduced because there is no liability of compensation cess. The buses that are used for transportation of passengers, the rate has been reduced from 28% to 18%. The auto rickshaws also have seen a reduction in the rate of tax, and we have seen two-wheelers, that is motorbikes, whose capacity is up to 350 cc. The rate has been reduced from 28% to 18%. All other which don't fall under 18% will attract 40% GST but without compensation cess. Apart from that, even agricultural machineries like tractors up to 1800 cc, harvesters, threshers, sprinklers and drip irrigation machinery have seen a reduction in the rate of tax, and also biopesticides, the rate has dropped to 5% from 12%, adding farmers by lowering cost and promoting sustainable practices without full exemption to preserve their ITC chains and extend the benefit of input tax credit. I would rather term the impact of GST on automobile sector has been humongous, in a sense that we can see a lot of automobile industries have reduced and slashed the prices of their vehicles post GST 2.0.
So I understand that whether it is a small car or luxurious car, in respect of all the motor vehicles, ultimately the GST component has been reduced.
Yes, sir. The GST component, in fact, has been reduced for every commodity which falls under the automobile sector. The variation is when you categorize them either as small cars or as a medium or large cars, where no the engine capacity is less than 1200 cc, they are treated as small cars. Of course, for diesel it is 1500 cc. For all other goods whose engine capacity is more than 1200 cc for petrol vehicles and 1500 cc for diesel vehicles, the rate has been fixed at 40%, but without compensation cess. That also transforms into a rate reduction.
Sir, what is the impact of these GST reforms on common man, sir?
For common man, personal care and household goods such as soaps, shampoos, toothbrushes, toothpaste, tableware, the rate of tax is now 5%. And for consumer durables like televisions, air conditioners, dishwashers, it has come down from 28% to 18%.
And common man likes to build at least one house in their lifetime. Is there any impact in the construction sector?
Yes, there is an impact. Definitely, there is an impact. Cement, which was earlier attracted 28%, now it attracts 18%. Marble, granite blocks, it has come to 5% from earlier 12%. So this has helped in reducing home building expenses and daily living expenses. Thereby, common man can afford to buy a house, residential house for his purpose.
Okay, sir. Now you have told about the goods. Sir, what is the impact on the service sector?
Yes, there are so many services that are being used by a common man, and that has also brought in lot of changes and reduction in his expenditure. For instance, the hotel rooms which were attracting various slabs of GST rates, now it has been standardized. Hotel rooms up to a room rent of 7,500 rupees per day will attract only 5%, and any room rent which is more than 7,500 will attract 18%. The second benefit is that the rate of tax on other service sectors like beauty parlors, yoga centers, all those things have also come down from 18% to 5%. The next very important aspect is, as I already told you, with reference to health sector. The health sector, health insurance sector, which was in fact a common man's demand that there should not be any GST on that, has been heard, and the rate now has been brought to nil. So there is no GST on life insurance policies, premiums paid towards that, and health insurance policies which is taken on individual basis and on family basis. However, the group insurance policies where the premium is paid by corporate will still attract 18%. So as far as common man is concerned, most of his service consumptions, the rate of tax have been reduced from 18% to 5% or nil rate of tax, which in fact is a substantial benefit which makes it more affordable for common man to pursue.
Sir has told about the exempted services. Can you tell me, sir, is there any goods added in the exempted list of goods?
Of course, there are so many items that have been added to the exemption list. Exemptions have been expanded for items like UHT milks, prepackaged chenna, paneer, Indian breads such as roti, paratha, pizza bread, life-saving drugs, diagnostic kits, exercise book, eraser, pencil, crayon, sharpeners used by students.
Sir, can you tell me what is the impact on the availment of input tax credits due to these changes in the rate structure? Is there any impact in the availment of ITC?
In fact, input tax credit is one of the USPs of GST. So there has been a substantial improvement in the entire supply chain mechanism as far as input tax credit is concerned. Let me first address the question regarding the availability of input tax credit. There may be a lot of apprehensions in the sense that there has been a reduction in the rate of tax after this GST 2.0, but the rate that was prevailing before GST 2.0 would have been at a higher rate. Whether the tax paid at a higher rate can be taken as credit and subsequently utilized for discharging their liabilities when the rates has been reduced. So this apprehension, the answer is yes. Whatever is the tax that was paid earlier prior to GST 2.0, even at a higher rate, can be taken as credit, input tax credit, which can be subsequently used for paying or discharging the tax liabilities at a reduced rate also. So this is the greatest advantage as far as input tax credit is concerned. However, it also comes with a caveat in a sense that whenever the goods are exempted or whenever the goods attracts no GST liability, the proportionate input tax credit will have to be reversed according to the supply that is made after GST 2.0. So while there are a lot of benefits, there is also a responsibility for reversing the proportionate input tax credit in case of exempted supplies.
Sir, now can you tell me what is the concession in respect of refund claims?
In respect of refund, now they have extended the provisional refund of 90% to inverted duty structure also. Earlier, this benefit was only for the zero rated supplies.
Thank you, sir. Sir, now I understand that presently the business houses feel some difficulties in getting the GST benefit while the discount is granted subsequent to the sales. There is some changes made in this sector also. What is that changes?
This is a very, very beneficial change that has been recommended by the GST Council. In fact, in terms of section 15(3)(b), any discount that is offered by the supplier to the buyer will have to be known at the time of supply, that is when the goods or services are actually supplied. So that is one of the preconditions for availing the benefit of this discount. There are three very important conditions that will have to be satisfied if a supplier wants to avail the benefit of post-supply discount. One is the quantum of discount or the concept of discount should be known at the time of supply. The discount amount should be mentioned in the tax invoice, and the recipient will have to reverse the proportionate input tax credit to the extent of reduction in the value that is extended by this discount percentage. Out of these three criteria, following all the criteria, it became very difficult for the taxpayers to avail this advantage. So now, out of these three conditions, two conditions have been knocked off. That is, the concept of this discount need not be known at the time of supply, and it need not be shown in the tax invoice also. It can be post-supply discount that can be extended via a credit note, and when this discount is to be claimed, it has to be ensured that the buyer who has availed the input tax credit has already reversed the proportionate tax credit to the extent of the discount offered. Now the procedures with reference to availing this benefit has in fact been reduced, and a simple credit note, a consolidated simple credit note is also enough covering more than one tax invoice, provided the buyer reverses the proportionate input tax credit.
Sir, what is the impact in respect of the exporters of goods or services?
One of the major impact with reference to extending export incentives for exporters is the recognition of place of supply whenever the supply of services is made through intermediaries. Before this recommendation was made, the place of supply, whenever the supply of goods or services to a place outside the country happens, the place of supply is always the location of the intermediary through which such exports actually happens. Even though the supplier is in India and the actual recipient is outside India, if it is done through an intermediary, the place of supply is always the location of the intermediary. So this in fact has caused a little bit of difficulties in a sense that even though they have satisfied all the conditions of export, because the place of supply is the location of the intermediary, they are deprived of the export benefits. Now this provision has been proposed to be scrapped, and the default rule is proposed to be introduced, which means the export incentives are driven by the place of supply with reference to the actual recipients, even though such supplies are made through intermediaries. So not only the small business entities but all exporters who undertake this supply through intermediaries will get benefited, because the place of supply now will be the location of the actual recipient and not the location of the intermediary. In this regard, the provisions with reference to the IGST has been proposed to be amended, and once the amendment is done, this facility will be extended to all the exporters and benefit them.
So now the exporters will get refund, whether that export is done directly or through the intermediaries also.
Yes, sir. Correct.
Okay, sir. Now, what is the benefit for the MSMEs?
Business and MSMEs, in fact, has received an extensive benefit out of this GST 2.0. To name a few: reduced input cost, simplified compliance obligations, corrected inversion of duty structure. There will be an improvement in the cash flow because of the availability of input tax credit, competitiveness and exports. It in fact supports a lot of job creation in manufacturing sector, textiles, automobiles, handicrafts, and also it aligns with the Make in India and Atmanirbhar initiatives. So this GST 2.0 in fact has benefited the entire stakeholder mechanism, including the MSME sector in this country.
Sir, is there any concession granted to the small business people who like to get a GST registration now?
Generally, the time limit for granting registration is 7 days from the date of application, and in specific cases, it is 30 days from the date of application. Now, they have introduced a scheme for specific category of taxpayers, applicants, whose tax liability is less than 2.5 lakhs per month. They will get the registration certificate within 3 days from the date of application.
Sir, you have said a lot of concessions have been granted by the GST Council. Whether they have been implemented through legal process like notifications and circulars.
In respect of reduction in tax rates, they have issued notifications with effect from September 22nd, 2025. So, most of the recommendations of the GST Council, 56th Council meeting, it has been brought into effect with effect from 22nd September 2025. Board has also issued circular regarding post-sale discount.
So, subsequent to this 56th GST Council meeting, is there any update in the GST Appellate Tribunal?
Sir, we know that the GSTAT has already been formed and it has commenced its operationalization. The GST Council has recommended to accept the applications for appeal by GSTAT from the last week of September, which has already commenced, and the last week of December has been fixed to start the hearing process. The notified date for making applications with reference to the past cases has been fixed at 1st of April 2026, and the last date will be 30th June 2026. So, this in fact brings in a lot of relief for taxpayers who are waiting for GST Appellate Tribunal to commence its operation, and it has commenced.
Sir, now to sum up these discussions, what do you like to say, sir?
Overall, GST 2.0 builds on 2017 launch by subsuming more taxes, digitization process for faster refunds, reducing disputes, focusing on the 7 pillars: simplification, fairness, consumer relief, MSME empowerment, state support, and demand driven growth for India's 5 trillion economy goal.
Thank you, sir. Thank you, sir. I think in this video we have covered the important points of this 56th GST Council meeting. We will meet in yet another video with some other topic. Thank you, sir.
Thank you.
Thank you,
Jai
sir.
Hind.
Jai Hind, sir.
Thank you. Jai Hind.